What you're seeing on the oil chart here, a little fib retracement jobs thing, kind of crazy. We're just doing this this is like a 30-minute chart, right? But we were down at 48.71 or 48.72 yesterday morning. This is during the European markets. And of course, we shot up. There's your news bar, zing, and they kept going up here. One thing I thought was interesting when I was watching the market last night, uh, in the evening time, I noticed it was kind of fading off a little bit. And I was like, yeah, something tells me they're not going to have an up day the next day. And lo and behold, they were kind of sitting on this 23.6% retracement line, and finally they just kind of busted it. Came down to the 38.2 and said, screw that one. And it came down to the 50%. So they actually corrected this thing back more than half the move. But now that they've tagged that, you notice they got a little ricochet back up here. So now the question is, did they sell it back off enough to kind of re level out the field a little bit before trying to push higher? Don't know. You've got still all kinds of newses and stuff coming out, so who knows what they're going to do. But right now, they're trying to be more positive than negative. I'll just try to be, say it that way. We're still up from yesterday. So even though they have corrected it back half that move, we are still up from yesterday. And right now, we'll see if they can take out that 55.29 up there and continue to move higher. Now remember, we still opened up the month at 56.44, okay? So anyway, I mean, they had a huge rally yesterday, but we're still down on the month. Even though they had a huge move, we're still down on the month. So really until they get above that 56.44, rallies are in question. I'll just put it that way. So anyway, we're going to have up and down. Nothing ever goes straight down. Nothing ever goes straight up. But we just going to have some up and down moves. And I mean, the average range, it's just a 14-day average is what I have here on this chart. But right now, the average range in the S&P is 210 points a day. That's right, 210. If you go back 2 weeks ago, that was sitting right around 90 to 100. So it's definitely expanded. But we've had 200 or 300 point days. So yeah, I mean just huge for the S&P. But that's the average over the past 14 days, and that will probably calm down eventually. But right now, it is a volatile market. Um, and of course, you've seen the VIX. I mean, heck, the VIX itself here is, I mean, if you just look at a daily chart, it's got huge moves in it. I mean, it went from down here at $45, shot up to 91, dropped back down to 68, back up to 88. And I mean, there's support right there, but I mean, trying to buy this thing at $80 and saying, "Hey, this thing's going to get more volatile," you got to have to risk about $20 on it. So I mean, it's just there's a lot of risk in that, in my opinion, and probably not worth it. But anyway, there it is. So, and even I mean, the crazy thing, uh, get this right. There we go. This is crude oil. You can see we kind of sold off. We had a big rally yesterday. We were down at $55 yesterday morning. Of course, they shot it up to $63. But now they're right now back down to $60 here. They actually went down to about 59 or something like that today. But crude oil is definitely still on the weaker side of thing. I think right now, if you just kind of keep, two things in mind, buy gold, short crude, you probably will be okay. I think with the little rally up here, um, I would be looking on the put side of, XLE, USO, uh, ExxonMobil, ConocoPhillips, all those things. And be looking for those things to probably continue to head lower on a longer term basis, not just necessarily over the next couple of days or a week or so. I think crude, right now, $60 is really a kind of a hard line in it. Um, and the reason for $60 kind of being a hard line is that's basically where frackers and oil people make money, lose money between that 55 and $60 area. That's kind of their, their break even point, if you will. Below that, they lose money. Above that, they make money. So it's going to have a fight right in this area, and it's been doing that. You can kind of see they're kind of flip-flopping around $60 right now. So, but I think you're going to see more to the downside in crude as opposed to the upside in crude oil. So, and on the other side of that coin, then you have gold. Gold was having a nice correction back, actually. And it was kind of pulling back. I was going to expect to see if it wouldn't, go down and test the 2920 to 2900 area. And lo and behold, with the news yesterday, they took off with everything else. I mean, everything went up yesterday for the most part. And now with the S&P pulling back, you're getting the what is that term they use? I hate those terms they use. Risk off. Basically, they're going to something more solid. And I mean, usually they'll fly into bonds and gold and silver and stuff like that. But the interesting thing about that, uh, let me show you this real quick. You notice silver here. This is just the silver chart. You notice it kind of jumped back up also. It went down to 27 and a half. It got actually below $30. And if you look at just this year, just the performance of the two of them, silver's up like 3.5, 4% on the year, where gold is up like 14% on the year. So you can see silver's really lagging behind. And even if you look at copper, copper's up like 12%. So silver's really the one lagging behind here. And for some reason, they just don't want to get above $35 and stay there. Every time they try to get up to $35, they just kind of sell the thing off. So it's almost like it's not justified to be there. But I think eventually it will be. It's just going to take a little more oomph out of this, market to, get moving back up. But silver's the lagger. So if you're trying to, buy silver, I mean, as far as, silver coins, bullion, and everything like that, it's probably a great price to buy it right now here, right around $30. Um, but you're gonna have to probably hold on to it for a longer time period before it really gets up and gets moving just based off his current performance. I think it's kind of sitting back and waiting for, to see what the industry, the manufacturing industry is going to be doing, and before it starts getting moving again. There's lots of promises. Of course, there's promises with every administration on that front, but we'll see what this one does and if it can strengthen it up some. So, but I mean, the thing is, right now, what we're seeing in the overall markets, we're still down. We're still on the weaker side of things, and we're struggling to really kind of go back up. But I think people have kind of gotten worried about it. The thing is don't get too overly chewed up on a short-term basis here. Everything you just kind of step back a little bit and just say, what's the real big picture? And for the most part, the S&P, even though it sold off pretty hard, don't get me wrong, we were still holding above a lot of the lows from last year. So unless you just started investing last year, yeah, you're probably getting hurt. But if you started investing a long time ago, then you had a little blip down, and that's just the way it is. Even though you're seeing negative stuff from where it was, agreed. Um, but I wouldn't be selling anything if you're holding stuff long term. I think this market probably is going to turn back around here, but I think it's going to take a couple of months to wade through all of this mess that we've got kind of going in front of us. And that's kind of where we're at. We had the CPI come out this morning. It was a little less than expected, I'll put it that way. Um, and which was kind of interesting because usually when you've seen that, the S&P's just kind of shot up off of that. And the S&P actually started selling off because of that, which I was kind of scratching my head a little bit. It was a bad CPI, so they sold it off as opposed to what they've been doing is they have a bad CPI or less than expected CPI. Let me put it that way. And then they rally it because they think, well, that means things are slowing down. The Fed's going to cut rates. Well, the thing is, we're still, running at 2.1, 2.2, 2.4, whatever percent on inflation. So inflation's still going up. It's just not going up as fast. And so there's really no reason to cut rates. We're not having negative CPI. We're actually having positive. And even though GDP's been positive, I hear people say that we're already in a recession. I have a hard time believing that. But the the thing is we're not negative. We're still increasing our inflation. So prices are still kind of going up. However, with what the markets have been doing here recently, we've seen a lot of prices come down. On the other side of that, you're still seeing I'll say the foodstuffs, move higher or stay up. Let me say it that way. So, I mean, your meats are still up, your grains are still up. So they haven't really, pulled back and corrected back and all this good stuff. They're still up on the year. I think wheat's the only one that's down a little bit for the year. Even if you look at crude oil is down for the year, but gasoline is actually up like 14% on the year still. So when I was in a different place and someone was asking me, why is the price of gas up? Just like, well, gasoline's higher. And the thing is, we can, get all the oil we want to out of the ground. The problem is refining it. And so we don't have that many refineries as we used to. And so we have a harder time refining, even though we might be running at, 92% capacity. We just can't produce as much as we used to. So you're still having a little bit of draws, if you will, on our inventory just because we can't keep up with it. And that's just why gasoline's kind of holding up a little bit. So, but that's just kind of the way that industry works. And I mean, we've lost, I know somewhere around is it eight or 10, 8 to 10 refineries over the past 5 or 6 years. And my guess is we've probably lost 20 or 25 over the past, 20 years, 15, 20 years. So, I mean, our last refinery was built back in 1977, so they're just getting old, and they just need to build a new one if they can. I don't know if they'll ever be able to do that, but anyway, there it is. But I think overall, the markets have jumped up, and I think I mean, they pulled back. You know, I mean, we've pulled. That's a daily chart. I mean, we've gone up, we've pulled back. Maybe they found a spot. They retraced it. Half the move basically that they did here yesterday. And now they're trying to push back up here somewhat. And the question is if we can get back above where we were at the opening bell this morning on that little blue bar right there, which is right there at that, 50, what is that, 53, 74, 75 area, whatever it is, and get back above that. They'll probably turn this thing back around and try to push up toward where the highs were. But right now, can't seem to make it there. So, but I think, I mean, going to be interesting tomorrow, just because you're going to be seeing earnings starting tomorrow. And the earnings starting tomorrow, you got the banks coming out, JP Morgan, those guys. I think Goldman Sachs is actually on Monday. But you're going to have banks starting to do their thing over the next, several days here. And the big ones are kind of coming out tomorrow. We also have PPI coming out tomorrow. And then we start getting into a lot of earnings next week. Next week, we have like Netflix and Tesla and stuff like that. So get some of the mag guys out there. And all of a sudden, we're kind of in full swing on everybody's quarterly earnings. One thing I'd be looking for is, there was not everybody does it, but they always put out guidance. I bet you don't hardly get any this time. I bet you everybody's so uncertain they're probably going to come out and say, we're not going to give any guidance because we have no idea what it's going to be like. and there's no reason for them to do that. I think they're going to be a little gun shy on the guidance thing. Um, so I'd be surprised if you hear a lot of them say, "Well, yes, in the next 2 quarters we're going to be doing this, and by the end of the year we'll have this much revenue." They're all probably going to be saying, "Well, I think we'll make money." That's probably basically what they'll say. Um, so I don't think you're going to get a whole lot of that throughout this earnings season. I mean, we're looking at the first quarter earnings here. And at the end of this month, we actually get the first quarter GDP. So it'll be interesting to see what first quarter GDP was like. And that's going to be the preliminary number. But it'll be the first look that we get on that GDP number. So I think it's going to be kind of a really interesting number to see at the end of this month. But I think with the earnings coming out, even though they might be good, some of them might be bad. That's the way it always is. I think you're going to see very little guidance along the ways, just because, well, they just don't know how to figure that right now. So, but just kind of watch out for that as we kind of start going through here. But anyway, if you have any questions, let me know. Otherwise, we will kind of um, see how this market goes. But like I said, I'd be looking on the long side of the gold side of things and the short side of crude at this point in time. And that's not just forever and 4 days. That's in the current market, just because I think crude's going to weaken up and gold's going to continue to move on up. So with crude oil, kind of what it's doing and everything like that, if you're not really, if you're, kind of trying to figure out, how to, trade in those crude markets and things. If you hang out a little bit, I actually have a program called the Energy Income Trader. If you're interested in that, where we're basically trading a specific ETF and stuff like that. If you're kind of interested in that, kind of hang around in this room, they'll be streaming that here in just a little bit, and that way you can kind of see what that's like. And if you like that, come join us. We have a lot of fun in there, and right now we're winning right around 92% of what we do in there. So it's pretty cool. So, but with that, I will see you all next week.